Hello guys, this is fairbinaryoptions.com and we are looking at the Great Britain pound US dollar, as you can see on the chart in front of your eyes. This is a 1 hour chart or the hourly chart on cable. Now you might say what is the purpose of that, but the name of this recording speaks for itself. We are looking to buy put options because a possible rising wedge or ending diagonal or terminal impulsive move is completed. This one starts with these lows here like this and ends with the highs here. So basically this is the rising wedge that we are analyzing here, and normally those highs should hold. If price goes and breaks these highs 161.47, which I don't think it will, but if price will turn and break those highs, then this analysis here is not correct. Well, normally if you zoom in now and trying to label the move that you have here, so this is our wedge so that you know what we are looking for. Let me take a shape from here. So this is the wedge from the lows to the highs here. This is the rising wedge like this. And in a rising wedge you have 5 waves, or price is traveling with 5 different waves, but all waves should be corrective. So all waves should be corrective, and the ones that are advancing, they should advance in a zigzag or with a zigzag family pattern move, and the ones that are corrective can go in any corrective shape for the fourth wave. But for the second wave you are looking basically at any corrective shape except a contracting triangle. So basically the move to the upside, first of all, if you look at the structure, it is being characterized by a pennant here. This is being called a pennant. It is a continuation pattern, and such a triangle or a pennant appears either as a fourth wave type or a B wave type. In our case must be a B wave type because we're looking at the rising wedge, and this B wave should be like this, and the move to the upside or the prior move is a wave A, so A, B and C to the upside, and there you go. This is the end of the first wave out of a bigger degree. Let's say a first wave out of this wave, out of this degree. Now from this moment of time we are looking for a second wave, but this time a second wave to the downside. And basically I'm looking here to have an irregular flat that's being A, B, and then the C wave to the downside. So A, B, and then the C wave to the downside. Only this one small to be the C wave. So looking for A, then the B wave, and then the C wave to the downside. And basically this to be the end of the second wave. Now from this moment on we already have some clues and we know what to look for, because with 2 waves already completed we know that any wedge or any ending diagonal is traveling between the 1 and the 3 and 2 and the 4 trend line, and this one should be no different. So basically we have another ABC in the form of a zigzag that goes to the upside this time. This to be wave A, this to be the B wave, and this to be the C wave to the upside. But the C wave, attention, it should be an impulsive move of a lower degree. If you go on the lower time frames you'll see that of a lower degree, and it ends right here with a fifth wave failure is called that one. So you have 1, 2, and the third wave to the upside is a zigzag as well, and then you're looking for a fourth wave to the downside. Well, this fourth wave should be this tiny little weeny wave there. So 1, 2, 3, 4, 5, and from this moment on a fifth wave with yet another zigzag, and by this moment of time our rising wedge is completed. Any wedge is traveling between the 1 and the 3, but not the 1 and the 3 like this, okay, but the 1 and the 3 at the moment the third wave is done. 1 and the 3 and the 2 and the 4 trend line, and this one again is no different. So what we have here, we have a rising wedge that is piercing with the fifth wave the 1 to 3 trend line like it is supposed to do, and then of course price breaks to the downside. This pattern will be invalidated if price will move to the upside, which I don't think so. What I'm looking for now is for price to continue the depreciation to the downside, or to continue the move to the downside. Here we might already be in a 1 and 2 and a 3 waves, with this being a first wave already down to the downside, something like this. Then to look for an expanded wave to come here. This would be a 1, 2 and 3, something like this, or only this to be the first correction, this to be the first correction, a next wave, another correction, and then the third wave. What I'm trying to say is that the 161.8 here to the downside most likely to come, so look for way lower values from this moment of time. I'm not looking for price to retest the highs, and therefore I would buy put options. In order to avoid a possible spike to the upside for a second correction there, we will look to buy put options with end of week expiration date. So buying put options with end of week, meaning this Friday, expiration date for cable is the logical thing to do, and we are looking for this one to come to fruition. And it is only Tuesday, but going with Wednesday with the FOMC minutes, and then later in the week normally price will have enough time to come and even retest these lows here. So our original target to the down, or the main target to the downside, would be this one. But when you trade binary options, you are looking not for price let's say to reach a specific level, but to be lower or higher than your striking price. In our case here, it needs to be lower than the striking price. Thank you very much for being here. Keep in mind, this is fairbinaryoptions.com, and we are trading with Lion Eye, our official sponsor.